Today is Thursday, October 9th, and today is one of those days where I overtraded, and that overtrading began with one single mistake. Now, typically I have a very solid process in terms of when I'm taking the opening drives, and one of the rules that I have is I'm not going to take an opening drive if there's too much divergence in the market. But going into the open, I saw AMD pre-market and it looked pretty good. It met my criteria for the opening drive. It had a catalyst, and I decided that I'm gonna go after AMD and NVIDIA. But at the open, I focused more on AMD because it looked much stronger and much better from the buyer's perspective. But I misjudged the overall market because SPY was going the other direction. We had a ton of other stocks that were selling off or pulling back. And because of that divergence, we did not get a clean opening drive. And within minutes, I was down over 20% on the trade. So let's break down exactly what happened from that first trade and what caused me to overtrade. So this was the first trade that I took. It's AMD, right? You guys can see the opening drive, and I'll break down exactly what I was looking at by opening up a chart on Thinkorswim. But this was the trade. I went in with 75 contracts, didn't work out. I lost around 26.5%, roughly $10,000 on this trade that didn't work out. Now, what's important to focus here is what happened after this trade. Right? We all have losses. Losses are part of trading. What happened after this is I started to take two more trades that did not go in my favor. And that's where I started to fall into the overtrading category. So let's break this down. What was the reason for me to go after AMD? So looking at it from pre-market perspective, you guys can see we pushed up higher over 240 and we made a high of 244 during the pre-market. So what I was looking for going into the open was I had a window between 239 and 240 for an entry. This was my trigger to enter this trade, to go into the 240 calls, and I was going to set my stop loss roughly around 238. Very simple plan. Price looked very strong compared to a lot of other setups. We had AMD above previous day's close and high as well. So a lot of things pointed towards AMD going up. Now, obviously, as it's pushing higher, that depends on how aggressive the buyers are, what the tape is showing. But a lot of things went wrong today in the morning against my favor, which caused me to be right on this trade. And that, again, that's part of trading. But what happens after you take a red trade is what determines how good of a trader you are. And that's where I kind of messed up today. So going back to this 5-minute chart, you guys can see we push up higher over 239. This was my trigger to enter, and I jumped in and it failed right at 240. Very aggressive sellers, and we got pushed right down. Now, this push down was very, very aggressive. It did not allow me enough time to exit out of the trade because when it was already pushing down, when we switch over to the 1 minute, you guys will see how aggressive this rejection of 240 was. We came right back down, and I was actually not even able to close the trade out properly. It took me a little bit of time, and I got out roughly, I believe, around $3.90. Even though my stop loss was around $4.50, which is roughly around 10 to 15%. That's a loss that I'm comfortable taking on these trades. But because that reversal was so strong that I didn't have enough time. Now, one of the big reasons why that happened was because SPY was not having any strength. Going into 674, which was a pre-market high as well, market rejected a all-time high level, which was 674. There was no interest around here, and this pulled back. Now, usually I pay attention to what's happening with SPY, but today, because I was focused on AMD and NVIDIA, I didn't take NVIDIA, by the way. I only went after AMD. That caused me to end up holding that trade slightly longer. But what happened afterwards is you guys can see we did recover, and I'm going to leave SPY chart up because this is the second mistake I made on the trade that I took afterwards, which I took a loss of roughly around 4,000 and change. Because that trade I didn't really hold that long. It was only roughly 10 to 12% loss. But when you look here, right, as AMD was coming back, we had pretty solid buildup of volume. But again, the mistake I made this time entering for the second time was I was not paying attention to SPY. SPY was still pushing down. You have at 950 NVIDIA going for new high of the day versus here at 950 SPY is pulling back and making a new low of the day. Now, because I was not in sync with the market, I was not paying attention. That cost me jumping back into this trade. You could call it revenge trading, you could call it overtrading, but I got in and I gave back 10-12% again on the second trade. Now, after this happened, guess what I did? Because of missing missing out on SPY in between those, the first AMD trade and the second trade, I actually went after SPY as well. But when I go after SPY, I typically trade SPX. I went for the downside because it was already pushing. I had FOMO at this point that I just took a bad trade. Now let me go after SPX and I'll be able to make that loss back. So on this trade, I gave back 12%, right? So at this particular point, I was down roughly close to $20,000 on the day across 3 trades. Now, the second 2 trades I took after the opening drive on AMD, that had netted me just over $10,000. And then the 2 trades that I took after on AMD was roughly around $4,500 loss. And then the SPX trade also roughly around $5,000 to $5,500 loss. Now, that put me around $20,000 of loss. And at that point, I realized I was not paying attention to the key details in the market that I typically do. And it all brings me back to the initial trade, which was the opening drive. Because how aggressively it failed, and it's not just the fact that the price action failed, but also because AMD has had a crazy run in the last couple of days. You guys can see here, AMD was roughly trading around under 170, and in the last couple of trading days, this thing has almost hit 244 points from 170. So naturally, the implied volatility on options on these type of moves are going to be increased. That means that the premiums are going to be priced higher, they're going to move more aggressively, and they're going to react more aggressively to small price changes. Now, at the open, usually premiums move very, very aggressively, regardless of how the IV is. And because today's data Thursday, and I trade only weeklies, that added on to the fact of why I took a 26% loss on this particular trade. Now, after that, I was able to make some of the trades back, but how was I able to do that? That's the important question. I did not take any of these trades after that for about 30 to 40 minutes. Now, the reason why I did not take a trade is because I needed to reset my mind and take a step back from the market, because clearly I was doing something wrong, which is not being able to understand the market dynamic. And because of that, that caused me to go after SPX here. Then when I failed that and I saw SPY was bouncing, and right away I went to chase AMD because I thought now it's gonna break because it's already high. It's working out based on my plan from pre-market, right? That led me to now go and chase this. Now, if I had continued, I would have probably made more mistakes. So giving yourself some time to reset, take a step back and reevaluate yourself, reevaluate what's happening in the market really, really helps you reset. But if you go and keep taking trades, you're gonna end up misjudging the market like I did. Now, 2 of the trades that helped me bring my $20,000 loss down to roughly around $8,500 loss was, one was this SPX trade here, and then the second one was right around here. Now, both of those trades, I was able to scale out. I was about to cut my $20,000 loss down to roughly 40% loss from that for the day. Now, that only happened because I took some time away from the screens and I was able to kind of focus more on trying to reset, right? So whenever you guys feel like you're going on a tilt or you're misjudging the market, you're not taking or following your rules or your trade plan, always take a step back. Resetting and coming back to the screen after clearing your mind is going to be one of the best ways for you to come back and attack the market. A lot of the times you can have every reason to take a trade in a certain direction. Market decides to go a different direction, right? It is going to cause your setup to fail. But how you react and how quickly you're able to come out of that reaction is going to determine how good of a trader you really are. I hope this video helped you guys, because I see a lot of people always posting profits. Today, I wanted to focus more on what happens when you take a loss, and every trader out there takes a loss. What determines a good trader versus a bad trader is someone pull themselves out of taking multiple red trades, right? The last 2 trades that I took on the day were both green, but that only came after I reset myself. And that's the emphasis of this video. Whenever you guys are going on a tilt or taking wrong trades, always learn to take a step back, reset, and come back. That will help you be a much better trader. I'll see you guys in the next video.